Let's face it, the financial close, it can feel like this never-ending marathon, right?
Absolutely.
You're sprinting towards that deadline, wrestling with data, and often just feeling, bogged down.
Mhm.
It's a massive effort for so many teams out there.
It truly is. It's a pressure cooker environment. You're
Hmm.
trying to synthesize just vast amounts of information, striving for absolute accuracy.
Yeah.
And the clock's always ticking, that pressure point.
Yeah.
End of every reporting period. Can be a real bottleneck for businesses.
And that's precisely the knot we're trying to untangle today.
Good.
We're taking a deep dive into a potential game changer, using the power of AI within SAP S4HANA, specifically looking ahead to 2025 to, well, revolutionize the financial close.
It's a big topic.
It is. And the question we're tackling head on is whether this technology can realistically cut closing times in half. I mean, really. And what would that actually mean for you listening?
Right. The real world impact.
Yeah. So consider this your shortcut to understanding a potentially transformative shift. We're drawing from insights provided by Upskeeling on these upcoming advancements in SAP S4HANA and the pivotal role AI is playing in reshaping finance operations.
And, what's truly compelling, or maybe just daunting, is the sheer complexity of the traditional financial close.
Hmm.
I bet many of you listening are intimately familiar with that intricate web of steps and all the disparate data sources involved.
Absolutely. For anyone who hasn't lived through the, let's call it, joys of month end, imagine trying to reconcile numbers that live in totally different
Oh,
departments.
great. Silos.
Yeah, manually processing what feels like mountains of invoices, calculating complex accruals by hand, and then ultimately trying to produce accurate, timely financial reports. Our sources really highlight some persistent headaches in this whole process.
Indeed, they do. And these consistent challenges are precisely why there's such a strong appetite for something better, a more streamlined approach. We consistently see issues with data silos, critical information just stuck in isolated systems. It forces finance teams into these really time-consuming and, frankly, error-prone manual reconciliation exercise.
Oh, the hours.
Yeah, imagine the hours spent just trying to get different spreadsheets to basically talk to each other.
Oh, the joys of those manual tasks. Trying to match countless invoices, laboriously calculating accruals, the endless back and forth of account reconciliation. It's not just time consuming, it's like a breeding ground for potential mistakes.
Exactly. The sheer volume of data that needs meticulous matching, general ledger entries against loads of subledgers, internal figures versus external data, it's just enormous.
Yeah.
This intensive reconciliation process, it acts as a significant drain on valuable resources, time and people.
Then you layer on the ever-increasing demands of compliance. Regulatory bodies want absolute accuracy, complete audit trails,
Yep, more pressure.
adding another significant layer of complexity and time to an already strained process.
And the ultimate consequence of all this effort, all this time, is often delayed insights. If the financial close stretches on for weeks, leadership just lacks the timely, accurate data they need to make informed strategic decisions to effectively guide the business. They're flying blind almost.
So the fundamental goal, and this really resonates with finance teams everywhere, is to dramatically shrink that closing window. But, and this is the crucial caveat, of course, this speed cannot come at the expense of accuracy. That's non-negotiable.
Absolutely not.
So how does SAP S4HANA in 2025 aim to achieve this acceleration with artificial intelligence, AI, right at its core?
Well, SAP S4HANA, as our sources emphasize, is more than just a traditional ERP system, right?
Right.
It's built on the ancient in-memory database foundation, which inherently gives you significant speed advantages just processing large data sets.
Okay.
But more importantly for our discussion today, it's architected to deeply integrate advanced tech like AI, machine learning, sophisticated analytics, right from the ground up.
Built in, not bolted on.
Exactly. And in the 2025 roadmap, we see a clear intensification of this focus, really embedding AI into those core financial processes.
All right, let's delve into the really interesting stuff then, these AI-powered breakthroughs. First up, AI-assisted financial insights with something called Joule. Give us the inside scoop on this, virtual analyst.
Right, Joule. So Joule is SAP's generative AI copilot. It's slated for deep integration within both the public and private cloud editions of SAP S/4HANA in 2025.
Okay, generative AI, so it creates things.
Exactly. Think of it like an intelligent conversational partner for your financial data. Because it's generative AI, it can create new content, in this case, explanations, insights, based on the vast amounts of data it can access.
Hmm.
It can intelligently analyze the connections between seemingly disparate data points and, importantly, proactively suggest concrete actions you might want to consider.
Okay, so how does this virtual analyst actually roll up its sleeves and get involved in the nuts and bolts of the financial close? Can we get some specific examples?
Sure. One pivotal area is automating the initial stages of data analysis.
Okay.
Joule can sift through massive volumes of general ledger entries, proactively identify unusual patterns or anomalies that might signal errors or inconsistencies.
Ah, so it flags
It
things.
flags those specific areas that require closer human attention.
Hmm.
This significantly cuts down the manual effort usually spent in those initial broad reviews. It lets analysts focus their expertise where it's really needed.
Right.
This could also have a pretty big impact on audit readiness, by highlighting potential issues early in the process.
That sounds like a substantial efficiency gain right there. Less time spent just manually searching for potential problems.
Precisely. And it directly translates to faster decision-making.
How so?
Because Joule can provide the contextual understanding around those flagged anomalies, for instance, it might explain potential reasons behind unmatched invoices or maybe unposted accruals.
Ah,
Finance teams can get to the root cause of issues and resolve them much more swiftly. The necessary info is just readily available, reducing all that back and forth investigation.
and it can even help navigate some of those notoriously complex period-end adjustment workflows.
Exactly. Joule can act as an intelligent guide, basically walking users through those often intricate processes step by step, helping make sure they're completed correctly and efficiently.
Earlier, we touched on the often tedious process of account reconciliation. Can you maybe illustrate with a concrete example how Joule might streamline this specific task?
Certainly. So during account reconciliation, Joule can not only identify and summarize the variances it detects between different ledgers,
Okay.
but it can also go a step further by suggesting the most likely corrective actions needed to resolve those specific discrepancies.
Wow, okay. So it recommends fixes.
Yeah, pretty much.
Yeah.
This instant analysis and targeted guidance could potentially save hours that would otherwise be spent manually investigating and figuring out the appropriate remedies.
That's a pretty significant leap forward. Okay, next on our list was intelligent automation for reconciliation and matching. Sounds like AI is poised to take over some of those really time-consuming manual tasks.
That's the core idea, yeah.
Yeah.
AI-driven automation is specifically designed to handle those repetitive, high-volume tasks. They're absolutely essential to the close,
Right. Can't skip them.
but they often consume significant resources. A prime example is applying machine learning to GRIR reconciliation, goods received, invoice received.
Okay, for those of us who don't speak fluent accounting acronyms, can you maybe break down the magic behind that a bit?
Aha, sure. Essentially, machine learning algorithms are trained on your organization's historical data.
Okay.
They learn to automatically and intelligently match invoices with their corresponding purchase orders and the records of goods receipt. The system learns from past patterns, successful matches.
So it gets smarter.
Exactly. It becomes increasingly accurate over time. It can spot even subtle discrepancies and, crucially, suggest probable reasons for those mismatches and maybe even potential resolutions.
Right.
It drastically reduces the manual effort usually involved in this often complex process.
So less time spent chasing down paperwork trails and trying to manually figure out why the numbers don't quite align.
Exactly that. Then we have SAP Cash Application. This uses AI to automate matching incoming customer payments with the specific open invoices they're meant to settle.
Right.
By learning from historical payment patterns, remittance advice, it can significantly improve the accuracy and speed of payment allocation.
And the benefit here goes beyond just a faster close, right? I mean, this must directly impact cash flow.
Oh, absolutely.
If you know who's paid what, you can manage receivables much better. Quicker ID of paid invoices means less time chasing settled accounts.
Precisely. You free up resources to focus on the truly outstanding debts.
Hmm.
By more rapidly and accurately identifying paid invoices, it helps reduce day sales outstanding DSO
Right, DSO.
and improves overall cash flow and liquidity. Gives the business more readily available funds for operations or investment. It's a big deal.
Yeah, that makes sense.
And we shouldn't overlook intelligent document processing either.
Which sounds like it tackles another major source of frustration.
Yeah.
Just the sheer volume of paper or, those digital documents that still need manual data entry.
You got it. Imagine someone having to manually read hundreds, maybe thousands
Yeah.
of invoices
Right.
and type that info into the system.
Oh,
Correct. Intelligent document processing uses AI tech like OCR, optical character recognition, and NLP, natural language processing,
okay.
to intelligently extract the relevant data from various financial documents, invoices, POs, bank statements, whatever.
Mm-hmm.
This dramatically minimizes manual data entry, significantly reduces the risk of human errors, and just speeds up the processing of these critical documents during the close.
So the overarching theme here seems to be that AI is really stepping in to handle those repetitive, error-prone manual tasks,
Yep.
freeing up skilled finance pros to focus on more strategic analysis and actual decision-making.
Precisely. Which leads us nicely into predictive accounting and analytics. This represents a move away from just, reporting on the past
Right, rear-view mirror stuff.
to actively anticipating future financial outcomes. It's more forward-looking.
Tell us more about how AI is enabling this forward-looking approach within SAP S4HANA in 2025.
Well, a key capability is generating more accurate estimates of future financial transactions.
Okay.
AI algorithms can analyze historical trends, identify patterns, factor in various business drivers, basically forecast likely financial scenarios.
Where is that most useful?
It's incredibly valuable for tasks like calculating accruals, where you're essentially estimating future liabilities.
Right, accruals are always tricky.
Exactly. And for overall financial planning, too, this can substantially reduce the time and, frankly, the guesswork involved in those often manual estimation processes, leads to more reliable financial projections.
That makes a lot of sense. Instead of relying on maybe outdated averages or gut feel calculations, you have AI providing data-driven forecasts to inform your estimates.
Exactly right. And then there's the power of real-time financial reporting. This is truly unlocked by the speed and capabilities of that HANA in-memory database.
Mm-hmm.
Finance teams can generate up-to-date financial statements virtually on demand, even during the active financial close process itself.
Wow.
This fundamentally changes the game. It reduces the need for many of those time-consuming post-close adjustments that often drag out the whole cycle. Imagine seeing your financial position in near real time.
So the data is essentially live,
Hmm.
and the ability to generate reports becomes far more agile. That's a significant shift.
It really is. And for organizations using the private cloud edition of SAP S4HANA, their centralized plan versus actual analysis.
Okay.
This capability seamlessly integrates your projected financial data with your actual results. It gives you a comprehensive, up-to-the-minute view of budget performance
Ah, okay.
and significantly streamlines analyzing any variances that pop up during the close.
This all sounds like it's propelling us towards this concept you mentioned earlier, the continuous close. Can you elaborate a bit on the practical implications of that idea?
Sure. The ultimate vision of a continuous close is having financial data so readily available, so accurate, and processes so highly automated
Right.
that the traditional period and crunch becomes significantly less intense. It could potentially even evolve into more of a continuous monitoring and adjustment process rather than this massive month-end push.
Less of a mad scramble, more of a steady state.
Kind of, yeah. Now, the efficiency of the close isn't solely about back-end processing power, is it?
Good point.
The user experience for the finance professionals themselves also plays a crucial role. And that's where SAP Fiori comes in.
Right, Chiori. The interface.
Absolutely. SAP Fiori provides a much more intuitive, user-friendly interface compared to, let's say, older enterprise systems.
Mm-hmm.
And in 2025, Fiori is also benefiting from AI enhancements. The analytical apps embedded within Fiori deliver real-time KPIs, key performance indicators, and actionable insights directly to users.
So they can see what's happening.
Exactly. Empowering finance teams to proactively monitor the progress of the close and quickly spot any potential bottlenecks or areas needing attention.
And it's designed to be more intuitive, right? Less reliant on navigating through layers of complex menus.
Precisely. With the introduction of more conversational interfaces and personalized dashboards tailored to individual roles, common tasks like entering journal entries or performing reconciliations become significantly simpler, faster, and less prone to error.
Okay. Finally, let's discuss situation handling. This sounds like a proactive mechanism to sort of head off problems before they escalate into major delays.
That's exactly its purpose. Situation handling acts like a real-time monitoring system for the financial close.
Okay.
It proactively alerts users to critical issues that arise, like Invoices that were unintentionally skipped, maybe errors detected in financial allocations, or critical approvals that are still pending.
Ah, so it catches things falling through the cracks.
Yes. By immediately flagging these exceptions, the system enables swift investigation and resolution. It helps prevent those last-minute scrambles that can often derail the entire closing timeline.
So with all these AI-powered tools and enhanced features coming together within SAP S/4HANA in 2025, we circle back to our central question. Can this technology truly cut financial closing time in half? It's still a bold proposition.
It is ambitious, no doubt.
Yeah.
But when you consider the combined impact of these various innovations,
Hmm.
the potential for substantial, very real-time savings becomes quite compelling.
Okay.
Let's maybe recap how each piece contributes to that potential saving.
Okay, yeah, let's break down the potential time-saving impact of these AI advancements. Where do the biggest savings come from?
Well, firstly, automation. As we've discussed, AI can take over numerous manual tasks, invoice matching, payment reconciliation, data extraction.
Right, the grunt work.
Exactly. Our sources indicate this automation can potentially reduce processing time by as much as 70% in specific areas. SAP cash application, intelligent document processing, those are prime examples where you see these huge efficiencies.
To 70%. Wow.
Yeah, it frees up finance professionals to focus on higher value activities.
That's a considerable amount of time that could be redirected to more strategic work, surely.
Definitely. Then we have the impact of real-time processing.
Yeah.
That underlying HANA database eliminates the inherent delays you get with traditional batch processing systems. So reconciliations, report generation, they can happen much more rapidly, potentially shaving days off the overall closing cycle.
Days, not just hours.
Yeah.
And the predictive analytics capabilities we talked about earlier.
Those can significantly streamline tasks, like calculating accruals. By providing those data-driven forecasts of future financial transactions and their impact,
Okay.
you potentially save another, say, 20–30% of the time typically spent on manual estimations and then the subsequent adjustments.
And we can't forget the proactive error detection, situation handling.
Precisely. By identifying and flagging potential bottlenecks and errors in real time and helping with swift issue resolution, organizations can avoid those frantic end-of-period troubleshooting sessions.
Yeah, the fire drills.
Exactly. Those often add significant hours, sometimes even days, to the close. And finally, the enhanced user experience from Fiori contributes by boosting overall productivity, makes it faster, more efficient for users to complete their individual closing tasks.
So it seems there's a strong logical argument for the potential for significant time savings, stacking all those up. But what about the practical reality? Are companies actually seeing these kinds of results in their closing processes?
Yes, and this is important. Our sources provide some compelling real-world examples that illustrate the tangible benefits.
Like who?
Boehringer Ingelheim, for instance, they implemented SAP S/4HANA and reported significantly reduced reconciliation times. They achieved a near-simultaneous global financial close in just 4 days.
4 days. Global close?
Across a vast number of entities, yeah.
That's truly remarkable acceleration.
Absolutely.
Yeah.
Johnson & Johnson also leveraged AI within SAP S/4HANA to streamline their finance processes, achieved notable improvements in data accuracy as well.
Okay.
And an unnamed electronics manufacturer reported significant improvements in their supply chain and financial processes, which indirectly helped faster closes by ensuring more accurate, timely inventory data.
So these aren't just theoretical advantages. Companies are really experiencing concrete improvement.
They are. However, it's important to, maintain a balanced perspective. We have to acknowledge that the precise extent of time reduction will inevitably vary.
Right. Depends on the company.
It depends on several factors: the complexity of the organization's structure, the level of integration with existing legacy systems, the maturity of their current financial processes. All these play a significant role in the ultimate impact.
So while cutting closing time by 50% is the big ambitious goal,
Yeah.
what might be a more, let's say, realistic expectation for a wider range of organizations?
Well, our analysis of the available info suggests that organizations with well-optimized SAP S/4HANA implementations can realistically aim for closing times that are maybe in the range of 40–60% faster.
Still very significant.
Very significant compared to traditional methods. And for those companies transitioning from older SAP ECC systems, or maybe still heavily reliant on manual processes,
Yeah.
achieving a halving of the closing time is definitely a realistic possibility, provided they have a comprehensive and well-executed implementation strategy in place.
Okay, so the potential is significant, huge even, but it's not simply a matter of, like, plug and play, is it?
Not at all.
What are some of the key challenges and important considerations organizations need to be aware of as they think about adopting these AI-powered solutions?
You're absolutely right. There are definitely hurdles to navigate. One significant challenge is just the inherent complexity of implementing a system like SAP S/4HANA.
Right. Big project.
It involves aligning various IT, business, project teams, and our sources indicate this cross-functional alignment is frequently cited as a major challenge by, well, significant majority of CIOs.
That makes sense. It's a substantial undertaking. Touches many parts of the business. What other factors come into play?
The availability of skilled personnel is another critical
Yeah,
consideration.
the people side.
Yeah. While the tech is evolving rapidly, the pool of professionals with deep expertise in both S/4HANA and AI,
Mm.
it's still relatively limited.
Mm-hmm.
Many SAP-driven finance teams are still early in their cloud migration journey, and a significant portion report challenges finding people with the necessary skill sets in both S/4HANA and AI.
So having the right expertise on board is absolutely essential for a successful transition and actually getting the benefits from these AI tools.
Absolutely crucial. Data quality is also paramount.
Ah, yeah.
AI algorithms are only as effective as the data they're trained on and process. Organizations with fragmented data landscapes, inconsistencies, they'll need to invest significant effort in data cleansing and integration first
Right.
to truly maximize the benefits of AI-powered closing.
The old adage, right? Garbage in, garbage out. Certainly applies here.
Precisely. And finally, we have to consider the human element, the crucial aspect of change management.
Culture shift.
Exactly. Adopting these AI-driven workflows will likely require cultural shifts within the finance team, plus comprehensive user training to make sure everyone embraces and effectively uses the new tools and processes. Resistance to change can be a big obstacle if it's not addressed proactively.
So it's not solely about the technological capabilities. The people and the surrounding processes are equally critical for success.
Exactly. A holistic, well-planned approach is absolutely key to unlocking the full potential of AI and transforming the financial closes.
Okay, so to bring it all together then, it sounds like the integration of AI within SAP S/4HANA in 2025 presents a truly compelling opportunity, a chance to fundamentally reshape the often challenging financial closing process.
It does indeed. From providing those real-time insights with Joule to automating a wide range of repetitive tasks, enabling sophisticated predictive analytics, these innovations directly address many of those long-standing pain points of the traditional close.
Right. And while achieving a precise 50% reduction in closing time might be, an aspirational target for every organization, the potential for substantial, very meaningful reductions, maybe in that 40 to 60% range, potentially even greater for some that appears to be a very realistic prospect.
That's the core message, I think. The technological capabilities are advancing rapidly. The real-world examples we've seen offer encouraging evidence of the potential.
Yeah.
But of course, organizations need to carefully consider the implementation complexities, the necessary skill sets, the critical importance of data quality, and the need for effective change management to fully capitalize on these advancements.
So here's a final thought for you, our listener, to maybe mull over. If your finance team could recapture a significant portion of the time and resources currently consumed by the financial close, what strategic initiatives could they then prioritize? What new value could they bring to your organization just by having that precious time back? It's certainly a crucial question to ponder as we look ahead to the evolving financial landscape of 2025.